So you've got an LLC, you're making some money, and you're looking to save on taxes. Well, in this video, I'll be showing you the strategy that LLC owners can use to save tens of thousands of dollars per year on their taxes, and exactly how I set the strategy up for myself by filing one form with the IRS. Now, quick disclaimer here, I am not a financial advisor, this is not financial advice, and I am just a random dude on the internet with a finance degree showing you how I am saving some money on my taxes. So with that out of the way, let's dive into how most LLCs pay their taxes and why they're paying too much. Well, quick scenario here. Let's say you're an LLC, you're making about $100,000 per year from your business. You're probably paying around 50% of that in taxes. Well, why is that? Well, one, you've got a 24% marginal tax bracket applied to your income. On top of that, you got a 15.3% self-employment tax. And then if you live in a state with state income taxes like California or New York, you could be paying practically 10% more of your income to those taxes. So all in all, you could be paying 40 to 50% in taxes on that income. And that's honestly more than your fair share of taxes due to you not filing this very important IRS form. Now, why is that? Well, if you have a single member LLC, so you are the sole owner of your LLC, you're taxed as what is known as a disregarded entity. Okay, so basically all the income that your LLC makes just flows through to your personal income, and that's why you're paying income taxes, self-employment taxes, and potentially state income taxes on that income as well. Now, everybody knows that companies have tax benefits, but if you're taxed as a disregarded entity, you're not really getting those tax benefits that companies have to offer. Now, same thing goes if you are a multiple member LLC. So let's say you've got you and somebody else, you're 50-50 partners, you guys are going to be taxed as a partnership, which essentially it's the same thing, okay? The income's just passing through to both of you personally, and you're not really getting the tax benefits that come along with having a company. In essence, these are like the worst ways for your company to be taxed. So how do we actually rectify this? Well, it's a very simple two-step process that, again, comes back to that IRS form that I've been mentioning. And it's kind of weird because a lot of LLC owners don't actually realize that this even exists. Because as an LLC, you have the ability to request different tax treatment. So like I said, normally you're either taxed as a disregarded entity or a partnership, but as an LLC, you have the freedom to go to the IRS and say, hey, instead of taxing me like this, could you actually tax me like that? And it's actually a very, very simple process to do, which can take you from paying 40 to 50% in taxes on 100 grand to honestly like 20 to 30% in taxes on 100 grand. Now, the reason for that is that currently you're probably taking all of your company's profits as personal income. This is going to be taxed at the highest rate possible and at that 40 to 50% range like we talked about earlier. However, there's a way for you to turn some of that income into owner's distributions, which are going to be taxed at a lower rate. And this is where that handy dandy IRS form comes into play, which brings us to step one of the process, which is to file Form 2553 with the IRS. This is the form for election of S-Corp tax treatment. Okay, so what you're doing here is you're saying, okay, IRS, don't tax me like a disregarded entity. Instead, tax me like an S corporation. And big picture, what this does is it takes you from purely a business owner to both a business owner and an employee of your business. So you're now able to pay yourself in two different ways. You can pay yourself owner's distributions as the business owner, and then you can also pay yourself salary as the employee. And this is where the tax benefits come into play. And that's because salary to employees is taxed differently from owner's distributions to owners. Like I said before, the salary or income is going to be taxed higher and the owner's distributions are going to be taxed lower. With the wages, you've got income tax and self-employment tax, which is going to take you up to that 40 to 50% range like we were talking about before. And this is what you're getting right now. But when you add in those owner's distributions, those are not going to be subject to self-employment taxes. And so you're going to save about 15% on those earnings, which could be huge. I mean, if you're making 100 grand, we could be looking at like $10,000 to $15,000 worth of savings just by doing this. And so what most people think is they're like, okay, I'm going to make this S Corp election. I'm now the owner and the employee. I'm just going to take all of my money as owner's distributions and not pay any self-employment tax, because why would you pay yourself salary when you're going to be paying higher taxes on it? Well, the IRS actually thought of that. And so they made a rule that said you have to pay yourself a reasonable salary if you are set up as an S Corp. Okay, so that means the salary or the employee portion has to be quote unquote reasonable based on the amount of work that you are doing in the business. So this depends on a whole lot of factors, okay? And there's no kind of rule of thumb for what a good reasonable salary is. So this is a place where talking to a professional might be a good idea. Also with filing that form 2553, it's a pretty short form, but still, if you're not comfortable with it, it's gonna be a good idea to work with a professional on that. But coming back to reasonable salary, okay? So you got the reasonable salary, how much do you actually pay yourself? Well, couple factors that are going to play into this. One, how many hours per week are you working in this business? So if you're only working 20 hours a week, your reasonable salary is going to be lower than somebody working 60 hours a week in their business, okay? So that's one piece of it. Next thing, what kind of work are you doing? Okay, a doctor, reasonable salary for a doctor is going to be far, far higher than a reasonable salary for, say, a marketer who's making videos on the internet, okay? So that's a factor that's gonna play into it. So for example's sake, I mean, let's say you're a marketer making videos on the internet. A reasonable salary for you might be somewhere in the ballpark of $40,000 per year if you're working 40-hour work weeks. If you're, say, an accountant, on the other hand, working a 40-hour work week, your reasonable salary might be a little bit higher at around maybe $80,000, okay? And these are all just estimates, okay? And so what you're gonna wanna do here is look at what average salaries are based on your location and based on the profession, and then scale that up or down based on how many hours per week you're working. Because what's going to happen here is if you were to say get audited, okay, this is where the reasonable salary piece is going to come into play. Okay, if you get audited and the IRS comes to you and they say, hey, we don't think you're paying yourself a reasonable salary for your position. Well, then it's going to be on you to prove to yourself that you are paying yourself a reasonable salary, okay? And what information are you going to pull on? Probably averages, the number of hours per week that you work, things of that nature. Okay, so figure out what the average salary is based on your location, based on your profession, and then you can kind of scale up or down from there based on how many hours per week you work. Again, that's just kind of a rule of thumb, but best to talk to a professional on this as well. But for example's sake, let's say you're a marketer making $100,000 per year, you pay yourself a $40,000 salary, and you take $60,000 in distributions. Now, originally, when you were an LLC, you're probably gonna be paying about 40% of your income in taxes, depending on where you live. So the $40,000 a year salary is going to be taxed at that normal, approximately like 40% rate, depending on where you live. And then your $60,000 of distributions is going to be taxed 15% lower at about 25% because you're not paying those self-employment taxes on those earnings. All in all, it's going to save you about $9,000 per year in taxes just by filing this form and by splitting out your income like this. And that's only for making 100 grand. I mean, you scale that up based on how much you're actually making in your business, and this could be tens of thousands of dollars per year or more that you're saving purely by filing this one form with the IRS. But it's not quite that simple. There is a second step in this process, and that is actually paying yourself that salary, because it's not just as simple as distributing money from your company bank account and saying, okay, this distribution is salary, this distribution is owner's distribution. It does not work like that, okay? If you're paying yourself a salary, you have to do it the same way that other companies do it, and that's through running payroll. Okay, so if you've ever worked for a company before, you've gotten your pay stub, you've gotten your paycheck, it shows you how many hours you work, your hourly rate, all of that good stuff. So you need to do that same thing if you want to pay yourself salary. And might seem intimidating. It's actually really, really simple. There are a lot of platforms out there these days that allow small businesses to run their payroll very, very simply, very smoothly, very cheaply. And so that's personally what I do to pay myself my salary for the various businesses that I am a part of that are set up as S-Corps. So if you go to applecreator.com/gusto, it's going to take you to this page, which is the payroll platform that I personally use for 2 of my different businesses. It's the one that I recommend to my friends, and it's the one that I've been using for years now because it is both the cheapest and the simplest to use. Also, they give you a free $100 after you run your first payroll if you use the link that I gave to you. It's also at the top of the description. So let's just go through that quick process right now, and I'll show you how this all works. This handles all of the withholding, all of the reporting, all of the taxes. All that stuff is taken care of for you. Gives you the pay stubs. Makes it really, really simple to file your taxes. I log into this literally once a month, and then once tax time comes, I just get all my forms off of here, and it's very, very simple. So you just kind of go through this process. How many employees do you have? Have you run payroll yet? Maybe no. If you haven't, if you're just getting started, how do you currently run payroll? Maybe we're new to running it. Best describe your business setting. With this one, I usually just say work in an office. What type of workers do you need to pay? So you are going to be paying yourself a W-2 salary. Okay, that is how it works to pay yourself a salary. Okay, basically you have W-2 employees, you have 1099 contractors. As an S corporation, you're both a W-2 employee and the owner of the business. So you're going to say employees W-2. Health benefits, probably not. And now we can get started. So this is going to take you through the whole process. You're going to sign up using all of your information, and then it'll take you through the actual Gusto sign-up process. I'm not going to go through that in this video because I've got a whole separate video on that, which you can find up here. But basically after this point, you just set what salary you're going to pay yourself, and they handle the rest. You just log in once a month, you click the run payroll button, and then it's all taken care of on your behalf. Now, this can be a pretty confusing process, so it's probably going to be best to talk to a professional if you have any concerns at all about being able to do this and not making any mistakes, because when taxes are involved, the mistakes can be quite costly. So really important to do that. Again, I'm just some guy on the internet with a finance degree, so don't take anything I say too seriously, but feel free to leave comments below. I'll be happy to help you out. Best of luck out there, and I'll see you in the next video.